All right, the time has come, ladies and gentlemen, and short squeezers alike. The NASDAQ short interest publication time has finally hit. The dissemination date of 4 p.m. Eastern 2021 is finally arrived. We are going to find out exactly how much short interest exists in all these FINRA members holding GME and AMC on short. This will give us a really good idea of whether or not the short interest is actually high enough into a position where it can be squeezed. Now that is combined with another metric, which is the short interest rate. This is the amount of interest that you have to pay the bank in order to take that short stock out on loan. And that is also a very important metric and thing to be looking at when trying to squeeze, because if it's a very high number, that means they're paying a lot of money to the bank, and that's what causes the squeeze. So let's dive in and look at both of those numbers and figure out whether or not we are riding it long and hoping for a, AMC to just break it after COVID, or if there's actually a short squeeze potential here. Okay, first things first, you have to be careful what you read and make sure you validate it, because there was a lot of fake information coming out today, and I want to just show you some bullshit that I saw, and I'm going to call it out for what it is. Here's some numbers. Complete arse. Don't believe it. You must verify your information. This was posted in the Discord of Wall Street Bets Elite. These numbers are likely estimates from the previous just heuristics of the trading. This is the same thing that Ortex does. It's the same thing that S3 does. Even when you saw the video of the manager of S3 talking, he was like, well, we use a lot of other data to try to figure out what it is. It's not actual information. We were waiting for the FINRA drop, basically when companies say exactly what they have in their possession in terms of shorting. Another one that's not true is this market watch. Here it says percent float shorted is 66%. This is not accurate. What you wanted to look for was something along the lines of this. So this date just changed. Literally, like, I've been spamming refresh all day today. In fact, it's much later than I thought I would be recording this video, because I thought this would be released much earlier. But the shares shorted here are for AMC 37.72 million. Now I'm looking at Morningstar Premium, and actually, if you didn't know, Morningstar is the official releaser of FINRA data. They have some sort of agreement, and Morningstar gets it first. And so I actually purchased this today, a Morningstar premium account. I'm pretty sure this is actually available in a non-premium account to access, but this is exactly what actually Yahoo uses. You can see here when it says shares short, it has this little 4 superscript, and it says data provided by Morningstar Inc. So I just went straight to the source. Why even look at Yahoo, right? Let's just check Morningstar. So Morningstar right here says shares shorted 37.72 million. The total float is 240 million, which means AMC short percent of float is 15.7%. Very low, not very high. That being said, Volkswagen squeezed and it only had 12%, but the people who were holding those positions, they were unified much more than millions of Redditors trying to optimize for themselves. And so it's much easier. So 15.7% is not very high. It's probably not going to be enough to squeeze. Okay, guys, now we're looking at GME. I'll go ahead and click short interest. Shares shorted 21.41 million. The total float currently is 27.26 million. Remember, the important thing here is shares shorted over the shares floating, not shares outstanding. Shares outstanding is just the total amount of stock in the market. Some of those are reserved for specific people, like if you're giving stock to employees. These things can't be traded. They can't be introduced into the flow of the market. So the only thing we care about is the short percent of float. And at GME is still at 78.46%, which is still very, very high. Now, keep in mind, this is still 10 days old data. So a lot of people could have covered their positions in the past 10 days because we have seen a massive crash in the past 10 days. So it's likely that this number has actually gone down quite a bit. And given the things that I'm about to show you, which are the percent interest on loaning those shares from various lenders or institutions, we're probably going to come to the conclusion that yes, in fact, this short percent float has actually decreased since this reporting. Okay, I just want to reiterate that this information is data from a previous point in time. It's just the most up-to-date data that we have. So to explain a little further, these companies are required to, at a specific time, what they do is basically take a screenshot of what their current portfolio looks like and then report that later. But they have to audit it and do some processes on it in that time frame. We're looking at a snapshot of the 29th of January. It's just being reported finally today. And so you keep that in mind. There is a delta between when the data releases and what they're actually reporting. So a lot of stuff could have happened in between. Another thing to call out is that there could be fraudulent behavior going on in the reporting of this data. The fine for reporting on this data is pennies compared to the potentials that these companies can lose by actually disclosing their position. And so imagine if you're playing poker and you have a royal flush and they're basically saying, hey, you need to tell us what you have, and if you tell us incorrectly, we're going to charge you $10. But in your hand, you can win millions. So of course you're not going to tell them what you actually have, right? It's the same situation. It's very advantageous for these companies to lie about what their position may be if it nets them a lot more money, even if they get fined and, a slap on the wrist. So as this excellent Redditor points out, there could be a lot of misinformation involved here. I think a lot of it is probably going to be accurate, but the people who are maybe at very high risk because they've invested a lot of portfolio into shorting these stocks may come out and lie about it. But let's go ahead and dive into the next bit of information that we have, which is that short interest rate. And that'll probably give us a little bit better picture of if people are actually withholding that information from us. So one source of this information comes from this website called iborrowdesk.com. Now, what they're doing, when I look at the about section of this, they're basically pulling the CSV files from Interactive Brokers and then parsing that and then loading that to the web page in this nice looking graph. So this is just one source. Now, this source says that basically, no, we're looking at a very low fee for AMC right now, and it's still going to be around 3.8. Again, the average is around 0.3%. If you're looking at Amazon, it's 0.3%. But back to AMC, it's around 3.5. Now you'll remember, Interactive Brokers was actually one of the companies that quickly limited its stocks, just like Robinhood did. And then when they were questioned on it, they basically said that they were looking out for other funds, not themselves. They have plenty of liquidity. They weren't sure how this would cascade down to lending houses or whatever. Seemed like honestly a bullshit excuse. So let's take this data with a grain of salt and let's try to compare this with other data that we also are looking at. Also, real quick, guys, GME is around the same exact percent, 3.7. Yesterday it was 8.9, but now it's back down to 3.7, which is, again, pretty low and would likely not create a squeeze effect because, again, if I'm just a big company, I'm just going to keep holding until this trend goes away and eventually this fee will go down, or even if it stays the same, it's fine because I'm going to collect a lot of money for all those shares that I sold short. So I'm happy to pay interest and wait for the price to come down even further. Okay, there's no way to show this on my phone, but I did just check at Merrill Edge on their app, and it says a 3.05%, and that was GME. And so it is actually seeming accurate that the international brokers and Merrill Edge, the fact that they're matching on the same loan rate means it's probably accurate. That is around 3%, which means short interest has probably dropped significantly, even since perhaps the reporting date. Remember, the numbers we're showing right now reflect information from 10 days ago. That was the status of the company's current short interest at that time. It could have changed up or down since then. So we're still at a lag. It's just this is giving us an updated information because before we're on like a 25-day lag. Now we're on like a 10-day lag. The real question is what's next for these stocks, right? Do we buy? Do we sell? Do we hold? Well, that's up to you, right? It's up to you. It's up to your financial position. It's up to your risk tolerance. It's up to your opinion on whether or not you think AMC will improve in the future or if you actually think GME still has a potential chance to squeeze. I think there's a lot of factors that you need to bring into your mental model and try to compute for yourself what you want to do. Me personally, I'm holding. Why? I think AMC has a potential upside of maybe going to $8. Currently, I'm holding at around $6, or maybe it's even $5.50 at this point. And if I hit 8 by the end of the year, that's an insane increase in investment, right? Usually the stock market goes up by 10% per year. This would be like a 30% increase. That would be amazing. Now, it might not do that, but I think it shouldn't go much lower, assuming that we all leave COVID and it kind of resumes business. Anyway, my AMC position I'm holding. GME, I'm also holding. Why? Because it looks like that squeeze percentage is still massive. Like a 70-some% squeeze seems legitimately doable. Again, do we still have the momentum as Redditors, as retail investors to actually hold and keep that squeeze? Do we have the foresight that, this stock could go up to $500 again? I don't know. I think, given the downward trends, I think people are very unlikely to invest again because I think a lot of people got in when it was already far too late at like the 200 plus mark. We'll just have to wait and see. My personal decision will be to hold and just wait it out. Again, this is a fairly small portion of my portfolio. I didn't risk too much on it, and I'm okay if I don't win money on this investment. So bring that all into your head, do your research, do your deep dives, look at the financials, and hopefully this information is valuable to you. Just want to reiterate, there's a lot of bullshit out there online on the Discords. People just see a number and they immediately just bleh, all over the place. And a lot of people support it and upvote it, even though they didn't really check it, right? And this is how misinformation gets spread. Huge problem, of course. And so make sure you you do your deep dives yourselves and you verify those facts. Lastly, I just want to push our Discord out there. It's in the comments below. We've already had 300 people join in just the past 2 weeks, and that was started from scratch. So there's a lot of questions being asked there, a lot of talk, discussion. Regardless, we have fun there too. We have a gaming channel. Occasionally we play AOE together and, you know, whatever else. So please come join us. We're a good time. And the next video that I'm posting will either be about this if there's more news, or we might just end up talking about some societal issues and new voting algorithms. So yeah, stay in touch, and I'll see you all soon.